Okay, good morning, everyone. Good to see everyone here. Hi, Zach, Simon, Henry, uh, Bit B. Hi, Bit B. Faye, Lawrence, David, Elizabeth. Hi, Elizabeth. Good to see you. Are we meeting this week? Okay. Ong Peng Eng, Carmen, you can, and okay. Good to see everyone here. Really appreciate everyone for being here today. Today this event is open to the public. Okay, there are some people that are from not SMT graduates that are here. So welcome. Okay, can we welcome those people that are in the Facebook Live? Okay, so first thing first, whatever I share with you today is for education purpose. This is not advice to buy and sell. For members of the public, this is our weekly graduates meeting. Okay, we meet every week, 10:30 a.m. every Monday morning. We have quite a lot of regular people here. We call this, instead of financial things, we call it Monday morning entertainment. Okay, this whatever I share with you is for entertainment purpose. These are not advice to buy and sell. Type MME if you understand. Okay, so we just want to have a gathering, okay, have a gathering, and some people say like a secret society, but actually the reason why we do it every week is because trading or investing or growing your wealth is something that is not easy, yes or no? But if to have reminder every week and things and to help you in your journey, I think it will be a lot of help. That's the reason why for SMT graduates, after the 3 days course, sorry, the 4 days course, we continue to share with people what's happening in the market right now. What do you do with your portfolio? Like last 2 days, market came down quite a lot. What should you do? Things like that. So on top of that, we have a portfolio of stocks that we monitor every week. Okay, that we share with them how we use the system to get in and out of the market. Okay, so yeah, for the public we do it alternate weeks. Okay, so but for sometimes alternate weeks, sometimes less often than that. Okay. So, okay, so let's get started. So for the public, we will just go through the market. Okay, maybe we can go through 1 or 2 stocks, okay, whether it's from the public or 1 or 2 stocks, but we will not go into the portfolio. Okay, I think to add some exclusivity to the existing graduates. So for portfolio stocks, we will not go through them. Okay, but we will maybe look at some of the stocks that you all want to take a look at. Okay, Mr. Tan is outside. Okay, Mr. Tan, you should join the Zoom room inside. Okay, check the Facebook Live and Facebook. Okay, for the Zoom link. Okay, so first thing first, let's look at the market. Okay, let's look at the market. I think by now you all SMT graduates should know the trend. Okay, but for public, they may not know. Okay, so what is the trend for 1 to 2 years? Okay, 1 to 2 years trend. Okay, weekly position, 1 to 2 years. Okay, sideways. Okay, sideways, very good. We bought in earlier. How many were here during after COVID? You were here during this period in June 2020. Type me, you were here then. Okay, so every week we go through this thing, right, over and over again. So there was a buy signal then, and then the sell signal. We came out in February. Okay, we asked them to exit. Okay, so we locked out some profit right now, and then till date, since February, we are not in the market. Okay, we are not long. Okay, we are not long. We position daily, no need to short, but position daily just exit position. Okay, if you are looking for 1 year or more, now is not a long position. Okay, sideways position. Okay, so you can see support resistance. The support resistance for right now S&P 500 is from here and here. So the trend also tells us that it's not clear right now. So more or less, it's like a sideways trend right now. Okay, if you want to buy in for the next 1 year or more, then maybe right now just hold on first. Okay, wait for what? Wait for it to have a buy signal again. Okay, when we'll have a buy signal again, I don't know. Okay, so when, let's say, during COVID time, okay, which is in February 2020, we sell off already. Then when we recover, we buy back again. Okay, over here. Okay, so that is how we use a system to help us to do position trading long term. Okay, so right now, no exit. Okay, sorry, no entry. Basically, just wait and see what's going to happen next. Okay, that is for 1 year or more. Okay, how about 3 to 9 months? 3 to 9 months position daily charts. What is the signal? Anyone? What's the signal? Is it long, short, down, up? Okay, so you can see the mode here is a bearish. Okay, we can see that the last 2 days, okay, we can see that the signal appear. Okay, there was, okay, over here there is no buy signal. Why is there no buy signal? Because the signal is, there's no teeth over here. Okay, so that this uptrend over here is not strong. Okay, but over here 2 days ago there was sorry, in fact on Friday closing, there was arrow with teeth. Okay, arrow with teeth, and then mode is bearish. So we can see that from the last 2 days onwards, the market has turned more bearish. Yes or no? Okay, market has turned more bearish in terms of the S&P 500. Okay, so this is actually a valid signal because we have a arrow here, we have a mode here, we have a teeth here. Yes or no? Okay, so that is a short signal. Okay, if you are shorting 3 to 9 months trade, 3 to 9 months trade, S&P 500 right now is a short signal right now. Okay, type yes if you understand. Okay, so there will be a sell signal right now for S&P 500. Okay, any question on the public? Any question? Where is the money likely to flow to? Okay, so sometimes a good question. Okay, where is the money flow to? Sometimes it's not flowing to anywhere. Like example, in a global financial crisis. Okay, I'm not saying this is global financial crisis, by the way. But example, in global financial crisis, everything dropped. Whether it's stocks, stocks are supposed to be riskier assets, but bonds also drop. Crypto also dropped. Everything dropped. Okay, the time don't have crypto yet, but all the asset class dropped. Okay, basically, people de-risk or de-leverage. That means they may, when they go into the market, they may leverage 1 time, 2 times, things like that. Okay, but when they when they de-risk, they may reduce their leverage, so the money disappear. Okay, that's a leverage. Okay. So by the way, I'm not saying that we are going into a crisis, global financial crisis. In fact, I did this, but the chart gone. Okay, so hopefully I can do this one more time. I think this will be very helpful for people who are confused or want to find out right now, what do we do about the market? Is it a buy? Is it a sell? What do we do right now with the interest rate high right now? What do we do? Long. Okay, so the time frame is clear. Okay, so we have 1 to 2 years right now, neutral, don't do anything, and then we have also 3 to 9 months. Now is a short signal. Okay, now it's a short signal. But let's take a look at. We can look at Fed fund rate. We can look at inflation rate. Where is it? Okay, here. Okay, so these are the things that I want to look at. Hang on. So this one open below. Okay, so there you go, like that. Okay, one more. Okay, so like that. Okay, so here we have the Dow Jones Industrial Average. Okay, why I use Dow Jones is because later I want to look backwards a bit more. Okay, so we have the Dow Jones Industrial Average. Okay, we have the Fed fund rate. Okay, and then the inflation rate. So this will give us an idea of how the market do when we have inflation, okay, versus the and also the Fed fund. Okay, let's take a look at the Fed fund first, because now the fear is what? What is the fear right now last 2 days? What's the fear of the market last 2 days? That they want to increase their rate more aggressively. Yes or no? They want to increase their rate more aggressively right now. Okay, so so going forward, what's going to happen? Okay, going forward, what's going to happen is so this one I'm talking about here is longer term than 1 to 2 years. Okay, I'm talking about here is the market cycle. Okay, in terms of interest rate increasing, decreasing. Okay, example, you can see here Fed fund rate increasing, decreasing. Okay, from the low to the high to the low again. Okay, increasing, decreasing. Okay, I'm talking about bigger cycles right now. Okay, so you notice over here that whenever we have the Fed fund, right, over here, whenever a Fed fund first increase, okay, when they first increase the interest rate, can you see here? This is the first increase. This is the first increase over here. I make it bigger. Okay, this one first increase over here. Okay, this is when they first increase the interest rate. After they drop, when their first increase of interest rate, what happened to the stock market? Okay, what happened to the stock market after that? So after the increase, right, after the rate drop, it will stabilize, and after it stabilized, increase. So whenever it increase, the stock market actually goes upwards. Can you see here? Okay, from here, right, it goes stagnant and then it go upwards. Yes or no? Okay, it goes stagnant and then it go upwards. Yes or no? From here, stagnant, and then after that it goes upwards. Type yes if you understand. Okay, so initially it may have some kind of fear, okay, but after that the market actually go upwards. Okay, market actually go upwards. You can actually go back even into earlier times. Okay, after the increase, this is 1994. Okay, 1994. After initial increase, the market goes sideways. Can you see here? The market goes sideways, and after that they continue increasing, and the market goes up. Okay, so that is something that you need to be aware of, okay. That doesn't mean that increase in interest rate doesn't mean that increase in interest rate means the market is going to crash. Okay, in fact, over here you see market goes down to the bottom and then start to increase. Okay, market actually goes upwards. Okay, here start to increase, market actually go upwards. So I'm going back to 1980s, okay, 83. Okay, the market has changed a bit, but can you see over here that whenever the increased interest rate doesn't mean that the market is going to crash. Do you follow what I'm saying? That yes, if you understand, it's not going to crash. Okay, in fact, the opposite is true. The opposite is true, right? So when the market after the increase and stop increasing, that's the market. That's when the time when you need to be careful. Okay, so let's take a look over here. When the market increase and then stop increasing over here, when the market increase to the higher point, right, and then stop increasing over here, then you need to be more careful. See, example, after increasing, they stop increasing. Okay, over here, that's when you need to be more careful. Yes or no? Okay, from here, they increase to the high, and then after that, they stop increasing. Then be more careful. Okay, so it is not as what we conventionally know. Okay, it doesn't mean that once it's increased interest rate, market will crash. It's not like that. Okay, there are times when the interest rate increase, that the stock market continue to go up. Like example, over here, the market increase, the stock market gonna go up. Okay, and even when it decrease the stock market, you need to be careful. Okay, so when example over here, the increase already, then it stop increasing, the stock market continue to go up. So you can see from here, right, that when the stock market, when the interest rate from the low start to climb up, almost in every case, after a period of fear, the stock market goes up. Okay, the stock market goes up. How long is the fear? It depends. Maybe it can be 3 months, 6 months. Okay, after the period of fear, the stock market generally climbs up. Okay, and on the other hand, when they peak, right, okay, and they start to drop, not always the case, but market may go down. Okay, not always the case, but market will go down. Okay, so this is some of the observation of interest rates. Okay, now let's talk about inflation. Okay, let's talk about inflation. I go back and find out. Okay, quiz time. Okay, what is the Fed fund rate right now? What's the Fed fund rate right now? Now it's very low, okay, 0.25%. Okay, guess what is the Fed fund rate in the 1980s? 1980s. What is the Fed fund rate? Guess lah. Cannot Google one, guys. Okay, cannot Google. Okay, 8%, 10%, 15%, 10%. Okay, so during then Fed fund rate, right? Okay, during the peak, this one wrong. Okay, during the peak, right? It is almost 19%. Do you follow what I'm saying? During the peak, okay, 17 to 19% during the peak. Okay, 1991. When it drops, it so-called drop is 14%. Okay, can you see? 14%. Personally, do you think the Fed fund will go back to this kind of interest rates? What do you think? Do you think we'll go back to this kind of rate? I don't think so. Okay. Why? Why is it not likely? Must find out why is it not likely? Inflation, and can you see this one? Yes, you can see the trend of the the Fed rate. The Fed rate is down. Do you follow what I'm saying? So let's say, example, you give morphine or give a drug to a person already. The person addicted to the drug, you cannot withdraw the person will die already. Yes or no? We are addicted to money, addicted to printing of money. Do you follow what I'm saying? That yes, if you understand. Okay, so we are addicted to this inflationary kind of debt already. Okay, so forget about going back to returning our the back US paying back the debt and things like that. I don't think will happen. But I think it happen, it will be end of the world already. Okay, so I think will not happen. Okay, and then second thing is also the market has changed. Okay, the market has changed over the years. Okay, so right now I think yes, Fed will increase, but I don't think we'll go back to the kind of interest rate. Okay, let's take a look at inflation right now. Okay, let's take a look at inflation right now. Why did they increase the inflation to so high? Okay, hang on. Oops, where is it? Okay, here. Okay, so why did it increase it to such a high percentage? It's because in the 1980s, right, the inflation went up to 14%, double-digit inflation. Do you follow what I'm saying? Okay, it climbed, right, from 6%, then keep climbing. For almost 2 years, the inflation continued to climb until the peak in August 1980s, right? The inflation was almost 15%. 15%. Okay, right now at this moment, we say we are like all-time high, not all-time high, like very high inflation, right? Where are we right now? About 8%. Okay, so the question we have to ask ourselves right now is this inflation going to continue upwards, or is it going to taper down? Okay, is it going to continue upwards or is it going to taper down? So in my view, okay, I may be wrong, by the way, everything is my guess. Okay, anyway, it's for entertainment only. Okay, in my view, I think inflation will start to slow down. Okay, why is it that? Okay, I use very simple ideas. Okay, very simple idea. What was this inflation? What causes this inflation? What causes this inflation? Actually, not the printing of money. Okay, not the printing of money. Why is it not printing of money? Is because when we start printing a lot of money, when did we start printing a lot of money? After global financial crisis, yes or no? Because we print a lot of money. COVID, we also print a lot of money. Okay, let's take a look at that. Okay, so when we have in 2000, 2009, when we started to print a lot of money, inflation was still very low. In fact, it remained low for a long, long time. Yes or no? Oh, here we start to print money already, okay? We start to print money already. So it is not because of the printing of money, okay? 2009, we print a lot of money. So yeah, okay? So it is not because of inflation, printing of money. What is it? Because what is the main thing? It's because of what? Supply chain, yes or no? Supply chain, actually not a shortage of material, but more of the supply chain issue. Do you follow what I'm saying? It's a supply chain issue. Number one, because of COVID. So China locked down, cannot deliver goods and things like that. That's why they cannot produce. Also, that causes one thing, COVID, China lockdown. Okay, see, when China lockdown, affect everybody, yes or no? Okay, when China lockdown, affect everybody. Why? Because China is like producing everything, right? So that's the first thing. Then second thing right now is because of war. Okay, so because of war right now, then there's disruption, okay, in terms of supply chain. Make sense or not? Okay, it will also affect like commodities and things like that. So that is the more of the issue. Okay, so remember that time when COVID started? Now it's like 2 years already. Okay, it's like when COVID started, what did we do? NTUC or Sheng Siong going to close and not close. Like we were scared of running out of things. What do we do? But still on the inflation story, what do? We stock up, yes or no? Go and buy toilet paper. Who confession? Who went to buy toilet paper? Buy toilet paper lah, buy a lot of stuff lah, yes or no? Okay, buy goods lah, buy canned food lah, buy a lot of things, yes or no? Type yes if you remember, okay? So we start to stock up. Why? Because we scared. Number one is they may not have supply. Number two is what? It may get more expensive because there's no supply, yes or no? Okay, so that is the issue right now for more. People are fearful of no supply chain, things like that. Okay, so right now at this moment, okay, not talking about war, right? Okay, do we still go and buy more of toilet paper or instant noodle? No lah, yes or no? Type yes if you agree. Okay, anybody because of the war went to buy more wheat or something like that? No, right? Okay, so I don't think this is more of a cyclical issue. Do you follow what I'm saying? It is something, not something that we will keep doing over and over again. Make sense or not? Okay, and also you see this war, right, will end. Yes or no? Either Russia win or some kind of thing, it will end. Okay, but even right now with this war still happening, people are getting used to the war. Make sense or not? Okay, in fact, stock market, since the first bullet shoot, and they shoot the first bullet, the market is still higher than when they announced we are entering Ukraine. Yes or no? It's still higher compared to even with yesterday's drop, we are still higher. Okay, so in my view, okay, it's only my view, this inflation is temporary. It is not a permanent thing. Follow what the Fed says, right? Okay, eventually people will start to the increase in price will only last for a while, because that is because of supply chain issue, because of the war issue. Eventually, when the supply chain move up, inflation will start to slow down. Okay, it will still remain high. Because there's still supply chain and still war going on, but the rate of increasing will be lesser. Okay, so I don't think this will be a permanent feature like in the 80s. Okay, so that is my view. Okay, eventually see now the issue is when your inflation, right, you increase your price, yes or no? How many notice that your what is that, Hokkien Mee is actually lesser right now? Okay, maybe they don't charge you more expensive. Yes, if you agree. Some of them charge more. Well, the day I went to this way, eat the what is that? The mee kia, right? Wow, minimum $5 like coffee shop, $5 mee kia. Oh, expensive, yes or no? Okay, but also have to do with also have to do with can the consumer absorb that, huh? Can the consumer absorb? Okay, so I think for now still okay. Yes or no? I think still okay. But there will come a time that the rate of increase will be less. It cannot be every year increase 25%. Then I cook at home after that. Okay. Eat $9 bak chor mee. Hello, the science here. Okay, so hopefully the inflation starts to slow down. Everyone's pay increase. Yes or no? Okay, everyone's pay increase, then the shop owner also can survive. We also can survive, then everybody survive. Do you follow what I'm saying? Okay, but yes, if you understand, I'm trying to simplify things, but I think simplify is good. Yes or no? Okay. Everybody complaining your bak chor mee and your mee goreng expensive. Okay, but actually, shop owner also need to survive. Okay, it's not. I think in the olden time, hawker make more money than now, isn't it? Do you follow? Last time you hear, right? Like people go hawker or can drive Mercedes, something like that. Nowadays you don't hear so much, right? Yes or no? Okay, so it is rental, it is manpower, and also the food cost that actually now they are harder to do this. Okay, so anyway, coming back again, so that's my view. Okay, doesn't mean the right view or wrong view. Okay, I feel that over long time, over market cycle wise, okay, in terms of like we go into recession, then full recession, early recovery, mid recovery, full recovery, then early recession. We have not yet go to that stage yet. Okay, so right now we are in the middle of the recovery. Do you follow what I'm saying? We are in the middle of the recovery, getting our food stable. Okay, the Fed is also not going to increase so much that it will go into recession. Do you think that's the intention of the Fed? No, that's not the intention of the Fed. Okay, it's not to increase so much so that it kills the economy. Okay, but they don't want to have a runaway inflation. So I think what they want to do is they want to look at the inflation numbers. So take a look at the inflation numbers. If the inflation numbers start to slow down, I think the market will start to rally. Okay, so that is my view. Okay, coming back again, let's look at shorter term again. For now, 1 to 2 years, one year, but I would say less than 1 year. I think you should be more cautious. Okay, right now. But is it a cyclical reset? Are we going to recession? In my view, no. Okay, I mentioned this many times already. Yes or no? Okay, so that will be for Dow Jones and S&P 500. Let's look at Nasdaq. By now, most of the S&P graduates should know my very long-term view, my position weekly view, position daily view. Yes or no? Okay, anyone still not clear about my view? I always say, right, you will know my view because I put it very plainly. Okay, because the challenge is sometimes you go for talks like that. After they talk very long, you still don't know whether it's going to go up or down. Okay. The day I throw you, yes, no. Okay, I throw the S&P graduates. Did I throw you? Okay, I throw you. I say, hey, the market is going to go either up or down, but it's going to move up a lot. Then Mark scold me, say, hey, we don't throw them lah. But it's really how I feel. It's really how I feel. I feel that there's going to be a big move. Do you all follow what I'm saying? Hello? Okay, I feel that there's going to be a big move. That's what I say lah. Okay, but I don't know up or down. I don't got right. Okay, but I feel that during that time there's going to be a big move. Okay, do you all follow what I'm saying? Like, yes, if you understand. Okay, so I don't know whether it's going up or down, but there's going to be a big move. That's what I was trying to say. Okay, but can you just trade volatility? Actually, you can. Okay, you can trade volatility, but not today's topic. Okay, the day when I say the market is going to have a big move either up or down, that's the reason why I see that. Okay, so hi Mark, why are you outside? Mark, you should be inside here. Mark Teo is inside. Okay, Mark is in the public. Okay, is it okay, let's move on. Okay, Nasdaq, same thing. Okay, weekly position will still be in a range. Okay, surprisingly, after the last 2 days drop, we are still in that range. Support is at 13,000. Okay, support 13,000, resistance at 15,000. Last week I mentioned about stock market. Actually, I mentioned one thing, right? Did I mention that about the recovery, the stock market recovery? Anybody remember? Is it sooner or later? Anybody? Nobody remember. Okay. Later, I mentioned this already. Last week I mentioned, right? It's more likely to be later than sooner. Okay. So why? Because we only have the dip only like 1 month ago. On average, how long it takes to recover? On average, how long it takes to recover after that big dip? We are gonna blue black already. Okay, about 6 months. Okay, 6 months will be the time to recover. So right now the dip after the war is about 1 month only. Okay, so even you look at the day when they fire the bullet, 24th of February, right? You count okay, so you count we will scrape the bottom in about 6 months. Okay, that will be the point. Okay, right now we are only like 2 months into the things. Do you follow? I think less than 2 months. Okay, because late February, right? Late February, exactly 2 months today. Exactly 2 months today. So we are still early in the recovery. Okay, so likelihood what's going to happen is we may still go into this sideways consolidation first. Okay, that's what's going to happen. My clue is look at the inflation numbers. Okay, if the inflation numbers start to drop, okay, then the Fed no need to be so worried. Do you follow what I'm saying? Okay, that is something to take note of. Okay, yeah, okay, that's something to take note of. You all watched the video, right, on Larry Williams last week? I mentioned, right? Go watch it. They also talk about inflation. Okay. Okay, next is STI. How many still holding STI since April 2020? Type in STI. Okay, so good. So if you are still holding STI, hang on. Okay, STI is our defensive stocks. Yes or no? In April 2020, we actually mentioned about this. Right now we are still up. Okay, so this was April 2020. I also give like long-term call. Yes or no? Okay, like during the peak of COVID, we pick some of the hospitality stocks. We pick some of the STI is another one. Things like that. Okay. So this was a stock that this was an ETF that we pick up. Still right now, we are still about 30%, okay, about 30% up, okay, from the low in April 2020, okay. So right now, I think we are like mid-recovery, okay, mid-recovery. When it goes up to maybe 80% from the full recovery, then we will exit. Okay, right now, we are nowhere near there yet, okay. Okay, so that will be something to take note. Okay, even for watches, even watches also say inflation. By the way, inflation, right? Your assets will go up or go down. What do you all think? Assets like your watch your car go up, yes or no? Oh, it will go up okay, in value okay, like your assets will go up. Okay, so the challenge with a high inflation and a market like that, right now, high inflation and relatively still low interest rate. Do you agree relatively we are still at low interest rate? Okay, is that if you go and put all the money in the bank, okay, your money in the bank, and you are getting very low interest rate. What's the bank interest rate right now? I also never put money in the bank. No money in the bank. 0.5%. So high, 0.7%. Okay, 0.7%. And so high, man. Not the private banking interest rate. The normal bank one is how much? 0.5. I don't know how much. Anyway, very low too. Last time very funny. You say 0.2 or you round, if you round down is 0%. Do you follow what I'm saying? Okay, saving I think not so high friend. I think very low 0. Oh, I don't have all this fixed D 0.5%. Okay, so if your inflation is at, let's say that's how we say how much inflation is at 8%, 9%. Let's say Singapore 6%. We are losing 7.5% every year if we put money in the bank. Even if you put in saving account, even worse. If you put in fixed D, also I don't have fixed D. So also the same thing. Yes or no? Got it? Okay. So that is the challenge with most people. So if you sell, let's say you cash out. Let's say example right now you cash out you buy asset, okay, and then you cash it out. You cash out the money already, right? You got money right now. What do we do with the money? You cannot put all the money in the fixed deposit. Do you follow what I'm saying? Okay, if you put the money, let's say $1 million, you put in the fixed deposit. Every year you lose how much? 8% is how much? $1 million, 8% is 70,000, 80,000. Do you follow what I'm saying? So is it correct? Okay, so it's a lot of money, yes or no? Okay, so the challenge is we still need to put back into assets. Make sense or not? Majority of the funds, you cannot be just cash out then put in the bank. Not wise. Yes or no? Okay, I share with you all the key. The key is not even inflation. The key is cost of fund, cost of money. Okay, the cost of money. Because if the cost of money is low, people will think, just put back, reinvest and things like that. If the cost of money is high, then they will want to say, hey, maybe I put it in the bank. That is the key, actually, not even inflation. Of course, the inflation is tied in because they want to taper down inflation, but the key is the cost of fund. Okay. And then anyway, it's still low now. Okay, so that will be for the index. And next one, any other index? Hang Seng Index. Okay, well, Hang Seng China, right? Actually, quite. You read the news? Read the news? I think it's quite affected. China Hang Seng, or it's quite affected by the COVID. Yes or no? It doesn't mean that the vaccine doesn't work. Because like the rest of the world is like recovering and things like that, right? But like China's still having a lot of Sinovac. Okay, so okay, Hong Kong market right now. I think right now, it is a opportunity to buy. Okay, the key is what? You must have holding power. Do you follow what I'm saying? Why? Because if you see that we have, this is the long-term time frame. We have the Asian financial crisis, SARS, global financial crisis, and recently, this is called, don't know what crisis, war crisis. Okay, and then we have the political reason, we have all the other reasons and things like that. I think right now, if you have holding power, I'm saying that you need to be at least more than 1 year. Okay, at least more than 1 year. Hopefully 2 years, 3 years. The longer the better. 2 or 3 years better. Then right now is a good time to dollar cost average on the Hang Seng Index. Got it? Okay, it's a good time to dollar cost average on the Hang Seng Index. Okay, same thing for the China market. Okay, so for China market, also the same thing. I think right now, if you have funds, okay, you have money and you have holding power, I think right now dollar cost China is also not bad. Do you follow what I'm saying? So this is a crisis area. Okay, guys, the key is like that. The key is number one, must have holding power. Okay, you cannot say you buy already, next month you want to sell, can or not? Okay, then cannot. Okay, if you want to buy and then sell in the next 3 months, will you make money? I don't know. Okay, but you want to buy right now and you accumulate for next 6 months, and then you want to sell in the next 2 years, you think it's a good place to buy right now? I think it's a good place to buy right now, my opinion. Okay, the challenge is it may not recover so fast. That's the thing, because it's just like that. Okay, when the market down already, it may not recover so fast. Okay, but some people like to do this. Yes or no? Okay, some people like to buy and then just don't see. Okay, they just buy and then they don't see. They buy and then they just keep. Okay, but some people cannot. Some people, they buy, they must immediately make money. If they lose money at a certain point of time, they're very uncomfortable. Okay, this also help you in your decision. Okay, are you someone that can buy and then don't see, hold it for long term? Okay, even if you draw down, it don't care, you just keep buying. Okay, or are you someone that very uncomfortable with drawdown? Let's say, example, you lose money, you keep looking at it, then you don't buy this. Okay. Okay, so that will be for well, we have like 200 plus people now. Please like and share the post, please. If you're in the public, please like and share the post. Let's look at Nifty. I think majority are S&P graduates. Sometimes I have this illusion that got a lot of public joiners. Actually, most of them are S&P graduates. Okay. Okay, guys. This Nifty, I think is going sideways also. Okay, should be also going sideways right now. Okay, so just to take note, should be going sideways also. Any question? No question? No question? Malaysia market FM. Okay, KL, actually during the election part that time, we asked you all to buy already, yes or no? Who bought during the election that time? The change of hands, that one. Anyone? Me, Zach, you all bought, right? During KL that time, remember the change of election, you all bought already, right? Right now you should be up already, yes or no? Oh, should be up already. I think there are some Malaysian who bought, I don't know. Okay, during this period, okay? So right now we are better off doing upper 25%. Okay, the time was the extreme, can buy. I think now already over at least they are not so concerned about or they resign to fate. Sometimes it's resign to fate, yes or no? Resign to fate, okay, so okay, then the market will price in all this news. Okay, so I will say that it's still cheap, okay, relative to the other markets, still cheap. But is it going to recover immediately? Don't know. Okay, right now, Malaysia, Singapore seems like it's rather resilient, okay, compared to the other markets. Okay, I think Singapore is a very good defensive stock. Okay, that means, let's say example, you want to put in you have some higher risk, right? Then you can use STI as a defensive component. Okay. And also in Sing dollars also. Sing dollars strengthened, right? Okay, so it's also good in Sing dollars also. Okay. So next thing, okay, let's go to public. Any other stocks? Today we do something different. Okay, let's take a look at stocks. Okay, you have any stocks that you want to take a look? Usually I don't do this because if not, wow, right, crowd. So but today public, right? If you have any stocks that you want to take a look, we can take a look at them. Okay. Okay. Facebook still down. Okay, let's look at the weekly charts. Weekly chart still downtrend. Okay, so we have here. If you ask me, I won't buy Facebook. I'll buy Twitter. Really. Okay, I'll buy Twitter. Okay. Twitter, the fundamental not very good. Okay, but I will still buy Twitter. Okay. Why? Because got potential catalyst. Okay, rather than Facebook. Okay. So this one's still down. You see weekly trend is still down. Okay, you can see the weekly mode is still bearish. Okay, since the sell signal, we are down 41%, which is good. Okay, at least you exited. And daily charts should be still down. Okay, still down. Oh, these are not buy signal because there's no teeth, right? Okay, so no teeth. Okay, so still down. Okay. The support is here. So once support breaks, it may go down lower. Okay. Where will be a good place to buy Facebook? Okay, where will be a good place to buy Facebook? Around now. Okay. I think around now can buy Facebook. Okay. Oh. It's still on the way down. Okay, so what you do is, for those who are a bit longer term one, right? what you do is wait for this thing, right? This thing to go up to 0 lah. Okay, so when you go up above the 0, then this one turn red, turn blue, and then you buy. Okay, anyway, it will still be cheap lah. Do you all follow what I'm saying? Okay, anyway, it will still be cheap. Okay. I don't think you should short Facebook at this point. Can you see the long-term line, the long-term trend line? This is a very long-term line. This is a market week monthly line, right? Okay, this is a monthly line, right? So if you ask me on the monthly basis, is it value right now to buy Facebook? I think it is. Okay, it is a value to buy Facebook right now. But but is it will recover immediately? May not. Okay, so it may not recover immediately. So, but if you love Facebook and you want to buy, if you want to buy Facebook and you can accumulate, then you can buy now. Okay. Do you follow? It's more of a value play rather than a growth player. Okay. Got it? Okay. So, but it's not the most exciting stock, I feel. Okay. Same thing with like Hong Kong right now or China right now. Okay, so you expect, right, that Facebook or like Hong Kong or China don't have like very catalysts for you to search up. Don't have that. Okay, now it's like negative news. It's always like that. Remember STI in 2 years ago? Okay, for the next 6 months, you only hear negative news. Yes or no? Okay. Remember 2 years ago when you hear STI, COVID cannot be found, 2 years later then fine, more and more people get infected, things like that. For the next 6 months will be like that. Okay, next month, 6 months will be like that. So if you got holding power, then buy lah. If you not holding power, then wait for other more catalyst stuff to buy. Okay. Okay, let's see what other stocks do you, Zachary. Let's look at Nvidia. Jonathan is outside. Wait, Jonathan no need to trade stock already lah. Just buy the what it can already what. At floor now 137 ETH already. Hot already, right? No need to trade stocks already. You buy bought it ma. Buy one, make money already. Okay. I sold my ape too early. Oh man, I sold at 28 ETH. Now it's almost 40 ETH. Very crazy. Okay, but I shift into other things, also make lah, but not make as much. But still be thankful. Okay, still make money. Okay. Nvidia. Nvidia. Wow, why Nvidia so jialat? Okay, so Nvidia actually not so good. Okay, so you can see on the mode it's turned bearish. Okay, you see on the long term it turned bearish over here. You can see the support also broken. I think more downside. Okay, so more downside. Okay, SMT graduate go into the Zoom room. Okay, already 40 yellow, already 40 ETH. Wow, same. Okay, but never mind. Okay, there are other things. Okay, so Nvidia now don't buy. Okay, next one, one or two more stocks that we go, then we can say bye to the public already. Okay, let the public choose. Okay, Nano Film. Okay, all Singapore stock. Nano Film. By the way, should look at US stocks. Why? Because it's cheaper in terms of transaction costs. It tend to trend more. That means when you're correct, you tend to make more. You trend more. Okay, transaction cost lower, it trends more. And what else? What other advantage of US stocks? News are more available. Okay, news are more available. Singapore stock, wow, a lot of zeng here, zeng there, zeng until you blur. Okay, so that's the challenge. Okay. Nano Film long term is still bearish since here it's still a sell signal. Okay, down already 37%. Daily charts also still down. Haven't find bottom yet. Okay, still down. Okay. No, so right now, even though the price like stabilized a bit, but it is still telling you there is no trend. Okay, So no trend, don't buy first. Yes or no? Because no trend, don't buy first. Okay, like example here, no trend, don't buy first. Wait for it to have a clear trend, then you buy. Okay. Next one is sets. Wow, this kind of stock, very long never see them really. Ayo, see, that's why I don't buy US stock. I don't buy Singapore stock also. Very boring. Very boring. Okay, like nothing much. Sideways trend. Okay, so it's stuck in the sideways range. It'll still be stuck in this range. 350, 460, 350, 460. I think it was forever stuck in this range. Forever. Okay, it will be stuck in this range for a long time. Okay, it will stuck with this range for a long time. So Singapore, what other things can buy? Banks can buy, like safety, right? Okay, you can buy banks. You can buy REITs if you want. You got no idea what to buy, you can buy REITs. Okay, but actually I got more idea than buy REITs. Okay, but let's say example, you got no idea what to buy, then buy the good REITs. Buy the leaders. Okay, buy the leaders of the REITs. Okay, so that will be, don't go and buy some funny REITs. Okay, next one, Amazon. I think also I'll look at the context of like 1 year better, because if not we got to go to many different time frame. Okay, so I think right now we are still stuck in this range. Okay, it's like a box over here. Okay, Amazon is good, I don't know. Okay, but it's stuck in this range. Okay, so you must wait for the range to be over already, then you can buy. So like until like this. Okay, once it's out of the range, then you buy. Like this, when you start in the range, you buy, wait for it out of the range, and you buy. Okay, so that is the key. Okay, so right now it's still stuck in this range. So wait for it to break above this range, then will be a buy signal. Okay. Okay, if not, then let's call it a day for the public, because then we go and analyze our portfolio stocks right now. Okay, for the public, oh yeah, forget to mention this thing. Come and join us in our next SMT class. The next SMT class, we will have a sharing session where we will share with you how to be part of this community. You can go to this link, CollinSeow.com/SWB to join us. Okay, and okay, can go to this link and join us. For SMT graduates, you know what to do. Comment SMT if you highly recommend SMT to the rest of the public. Okay, because they don't know what's happening, right? Okay, so okay, so you can see, thank you 90765 Cassandra, Rina, Weijie, Weijie, hi Weijie, Agnes, Carmen, Janice, Joey, Terrence, AWK. Okay, come and join us. Okay, we are not a perfect community, don't have, okay, but we keep working at it. Okay, so right now we have like 527 in the Zoom room. Okay, about 204 in the public room. Today a bit low expected. Okay, market down, everybody cool it. Okay, so come and join us. Okay, and do this SMT together. Okay, thank you, Jonathan and Robbie. Okay, so guys, for members of the public, thank you for joining us. Appreciate your time. Okay, remember that what we shared just now, and see you in the future. Say bye.